All right. I'm not sure if my voice was audible all this while because I just started seeing. Okay, no audio. Thank you so much. So we'll start from the beginning. No worries. All right. Sound check. Okay, good. Good thing I noticed. There have been instances when I noticed quite late. So this is good. All right. So welcome to today's session of EXP-Invest Presence Retail Trader Special. Thank you so much for joining me. Today's session is very relevant to what is going on in the market and what you might be asking yourself every single day. Today we are here to talk about how to pick stocks amid rally. Now, I know right now the macroeconomic data looks seen that Indian GDP crossed $4 trillion. Congratulations to all of us. And the inflation data is cooling down. So that was actually the first reason why this rally really got up momentum and started seeing participation, even from someone like me who was waiting for a much lower level, especially 18,600, right? So now that we can see that the market has unleashed itself into a pretty strong rally and it looks like it's going to rally all the way to the new highs, how do you go about picking stocks? Because from the bottom of 18,800 that was formed, I can see that Nifty has already moved nearly 1,000 points. 19,800 has been touched, nearly 1,000 points in just 20 days. And within this 20 days, lots of festivals came and went. Usually we see very low participations. My portfolio in the last 10 days have already taken my portfolio nearly 5% higher. So I think there is a very specific skill set when it comes to trading, and the art of stock picking is something definitely worth mastering. So in this session, I'm going to tell you that in a situation as this one, that is when the market is already in a rally, how do you go about determining which stocks to buy, which to sell? So in order to do this, I will be firstly telling you session, or during the session, I will tell you how to get that full knowledge as well. Okay. All right, so before I share my screen, just now hear my voice and everything fine, right? Because on YouTube, I can see a lot of people wrote no audio. So if anybody can just quickly confirm that the voice is back. Let's just see. Okay, great. Thank you. Thank you so much, Sudarshan. Okay, so let's shed matter of barely 20 days. Today we saw a little bit of a downside, which is great because good opportunity to buy more stocks, and that's what I did, right? I think the market is going to definitely continue upside here. Okay. So you guys have seen me show charts like this one multiple times, and I have also received a lot of interest from lots of viewers. Oh, by the way, for anybody who wants to purchase TradingView, now is a great time because the Black Friday sale is going on, and 70% discount, it just popped up. So I thought I will tell you. Let me also take a screenshot for my members who constantly have to subscribe to this. Right. Superb. Anyway, so this chart you guys have seen me use. This is basically the comparison chart. Now I'm going to create a new layout and I will show you how to make a comparison chart. Because comparing stock movements over a certain period of time with Nifty is very important, is a good way of determining whether the stock is performing better than Nifty or not. This is also called relative strength, right? So we'll go into new layout and we'll create that from scratch. All right. So first thing first, you have to click on new layout and open that. Then we will open Nifty because we want to compare with Nifty. Ultimately, when it comes to picking stocks or building a portfolio, maybe for intraday trading, maybe for swing trading, maybe for your primary objective is to beat the index. Okay. So if you want to beat the index, you obviously have to be in stocks which are performing better than the index. So this is the Nifty chart, and watch this carefully. Okay, this is in the line chart format. Sometimes you might have your charts in, say, the candlestick format. So what you can do is just click on this tool here. This toolbar will help you change the type of chart that you have, and then click on line. So once you've set it as a line chart, now you can click on this plus button and you can add all the symbols and all the stocks that you want. So for example, say you want to compare Reliance. Okay, so just click on Reliance and it will get added. Now you can see, okay, let me just increase the scale size, because right now it's very small. Let me make that 16. Okay. So you can see that Reliance got added, and say I want to see the data from the bottom day. So the bottom day was 26th October, right? So I will just drag it back and I will set it to 26th October, because I want to know that from the day of 26th October, how have Nifty versus Reliance performed. So Nifty since 26th October has gone up 4.35%. Nifty and Reliance has gone up 5.25%, which means Reliance is right now outperforming the index, right? Let me change. Let me just put myself this side for some time so that you can see it. So see here, you can see 26th October, right? So whenever you move this chart, this is a comparison chart, like I said, whenever you move here, the date that is at the leftmost side will become the starting point. So both your stocks and your primary underlying, which is Nifty in this case, will be treated as zero, and the movement after that will be represented on the right side axis in a percentage format. So for instance, right now our data is starting from 13th of September. So starting 13th of September uh, until this date, that is right here, which is the 15th of November, we can clearly see that Nifty between that period went minus 1.47% on a closing basis, and Reliance was minus 3.49%. And if you want to see till date, then you basically make sure that the last data visible is today's data. So from the date of 22nd August 2023 until today, Nifty have respectively performed like this. So there was a period of, so basically Reliance has underperformed Nifty for this period of time. But we are interested in the bottom. Okay, so 26th October is when we are interested in. Since then until now, Reliance has been outperforming Nifty. See, because I am a swing trader. Okay, so I am talking like a stock. When you're a long-term investor, even then you want to do this analysis and you want to make sure that your money is always allocated in stocks which are performing better than the index, better than your benchmark. Your benchmark can be anything. It can be Nifty, it can be Nifty 500, CNX 500, investing in, say, sector specific stocks, right? If you're going only with banks or with realty or with infra, you can also do a sectoral comparison of them. Or say if you're very bullish on any sector, say you're bullish on banking, so you plot the banking index the way I plotted Nifty, and then you add all the other banking stocks to compare, and then you straight up, what you can do is you can identify the stocks which are right now outperforming the index, and then you go about doing further analysis on them. What do I mean by analysis? Okay, so now out of identified few stocks, see, there are two ways to go about it. Either you take your watch list, whatever be your basis for watch list preparation, and you take the stocks that are outperforming the market, and then you do further analysis of that on those. Or you analyze the market, use your screeners, use your whatever to come up with a list of stocks that fit the bill to perform, and then choose the topmost performing stocks, that is relatively outperforming stocks that are relatively outperforming the index. The best, you choose them to place your trades. Okay, so let's put me back in my corner and let's move on to discussing one of these two things that we have just elaborated on. Let's elaborate on what the two things that we in a summarized manner mentioned. Okay, so I have this ongoing course called the Advanced Technical Analysis Program, right? So in that, I recently discussed with the students this 5-step process through which you make the decisions or do the trading. Okay, so it starts with identify, in that step, of course, there are lots of sub steps, but in the interest of time, I'll summarize it. So in the step of identify, you use different screeners, what screeners, how to build screeners, how to create the dashboard to use those screeners. Much lengthier discussion, but basically you use the screeners to identify good stocks or stocks which, whatever may you might be using momentum indicators, you might be using moving averages, you might be using Bollinger Bands, whatever you're using. On the basis of that, you get a set of stocks. You need to start monitoring them. Sometimes I personally end up monitoring a stock for a month because different stocks have different moving styles, different reaction times, and different lengths of their impulse waves, basically the wave that you're trying to catch, right? The uptrend, as you might call it, have different, accordingly, you have to monitor them differently. Now, what happens is that you need to monitor to identify the best possible time to enter the stock. Now, when you're done monitoring, so what I do personally, I'll show you is, I will run my screener every day. Okay. My screener runs, it gives me certain outputs. I don't look at them. When the screener stops giving a certain output, I will add them I'll create a watch list with a date and I will study. Now, suppose I see something positive. I feel like, okay, you know what, it's looking good. So I will add it to this orange list, which is called opportunity, because there is a possible opportunity there. And then this is when I start monitoring it. So every day in the morning, I open the opportunity list and I see, is it the right time to enter this particular stock, right? So this opportunity list gets monitored, gets followed until it's time to go green. That is, until it is time to go long in it. So then the stocks are moved to the long watch list, right? Now, once I go long in the stock, then the trailing happens. So the 5 steps that I was saying was the 5 steps to successful swing trading are: identify, in which you run your scanner and identify stocks where you might want to participate. Then monitor, where you follow the stocks to find the right time to enter in them. And you need to position, that is, you buy the stock, then you start trailing it, that is, you set the trailing stop loss and you follow the stock, because otherwise you might end up booking premature exit. That is, you book the profit and you exit, so these are the 5 steps. Now, out of these 5 steps, the least important steps are actually where people spend most of the time. That is, the entry and the exit. The position and the exit step are the least important. The other 3 steps are very, very important, in which trailing stop loss is important to obviously monitor and manage your position, in which the first step that I said, the identify step, people barely spend any time there, whereas personally for me, I spend nearly 80% times in the in the identify stage, and then the monitoring stage, which takes the second highest time. Okay, so to comment in the comment section, which stage takes up most of your trading time, and then I can elaborate further on your answer. Okay, so in the comment section, quickly type down which stage takes the most. Okay, so let me tell you about RSI. Okay, so what role does, now for example, we'll take the stock of Reliance, okay, because Reliance is obviously a lot of people's favorite. Now, I will show you something very interesting, something that I have done a dedicated session on in previously, but I would like to talk to you about it again. Okay, frame of Reliance. Okay, now in this, I want you to look very closely. Just couldn't see my toolbar there because my camera is set right in front of it. Now, bigger, because this is what we are discussing. Okay, and I want you to only focus on the orange line in this, not other lines. I know it's a little distracting, but bear with me. Okay, now look at this phase. Look at this phase here, and then you look at this phase here. Now I want you to look at part here, this part here. Now, if you will notice, let me just draw some vertical lines. Okay, Now, if you will notice this part, I'm actually going to extend this till here. Now, just notice what is going on here. This entire section, we can see that the price of Reliance went up 17%, and then this section, Reliance price went up nearly 30%. Okay. Look at RSI. What is RSI doing? RSI is in the range of, on the downside, it is taking support near the level of 40, and on the upside, it is going 70 plus, right? In the second section also, it is taking support near the level of 40, and it is going 70 plus whenever RSI goes up here and here, right? Now let's look at the other sections, the downward sections. What is RSI doing here? Here, RSI is constantly breaching the level of 40, and on the upside, it is barely going above 60. Okay, it's taking resistance near the level of 60. But on the downside, it's breaking the level of 30 also. So 30 to 60 to 30 minus. The second time also, it took very strong resistance at 60 like 3 times, and it broke the level of 30 both the times that it came down. This, what you're seeing, my friends, is called the phenomenon of RSI range shift. So when you want to participate in a stock and when you have a watch list, okay, you need to make sure that your money is in stocks where the RSI range shift is positive, not negative. Because see, when we are trading, especially swing trading, our biases are bound to kick in. So if you have a lot of confidence in any stock for whatever reason, sometimes I've seen people have a lot of confidence in stocks like Rajesh Export also. Okay, just today, in fact, I told a really fine woman to absolutely forget about the stock because for some reason she always keeps coming and asking me about Rajesh Export. But today I was very clear to her. I was like, forget it. It's not a good company. It's falling. For whatever reason, you will not be able to be consistently successful. So when you want to do swing trading like me and you want to participate in a stock, what you need to do is you need to see whether the stock on the 75-minute time frame, because the time frame is very, very important here. If you're doing a even shorter period trading, then look at 15-minute or 3-minute if you're unfortunately an intraday trader. But if you're doing swing trading like me, where you want to hold your position for like 2-3 weeks minimum, and up to you're okay holding for them like 3-4 months also, but you want to make a sizable return on them, then make sure that you're putting your money in stocks where there is RSI positive range shift. Okay. So today I have elaborated for you 2 absolutely golden concepts, which my friends, you will not find anywhere, or rather you can, nothing out of the ordinary, but it is the chart formation technique that I discussed. There are 2 very easy techniques. Of course, you need a lot of practice, but you also need to remember that these 2 by themselves is not enough. Okay, there are at least 10 more things in my process. So the stages is one that I told you. Then there are set of rules for volume. There are set of rules for moving averages. There are set of rules for the combined study of all of them. There are set of rules for the RSI on 15-minute versus 75-minute versus daily versus weekly. And you know, I'm using the word set of rules, but they are more like observations. They're more intuitive to me. So it's not like I have a handbook or anything anywhere that I refer to every time I want to take a trade. For so long, I was calculating the other day, I have done technical analysis for more than 25,000 hours in my life. Okay, so you know, doing anything for that much amount of time becomes very intuitive. For more knowledge or you know, help with respect to swing trading, then I'm dropping the link of my Telegram channel with you. It's very easy to connect with me via Telegram, and that is actually the only way also to connect with me. So what you can do is just quickly go on your Telegram and write trade, TRADE, with Kavita. Kavita is my name, and hit enter. Then just join this Telegram channel. Okay, so the link is being pasted in the comment section for you to click, and that's a great way to comment or connect with me. And if you know, have questions or anything, you can also book a one-on-one consultation session with me using the link pasted by the ET moderator. Other than that, I don't really have much more to add, because especially because of the shortage of time, we are already crossed the time limit for this session. So before I go, however, I will take 5-10 minutes to answer your queries. So if you have questions for me, please drop them in the comment and let's take a look at them. All right, let's see. Oh, okay. I hope my internet connection is fine. I mean, I've been traveling for so long, but I'm finally home, and the internet speed here is usually fantastic. Yep, great. I mean, I would love for it to be better. Okay, no worries. I hope you guys had a good live session experience and for not a lot of buffering. So Justin has joined us and he's asking, identify the stock. So Justin, I just gave you 2 golden rules to identify the stocks yourself. Now, if you want to know about those stocks identified by me, unfortunately, I can't do that for free because I am a SEBI registered research analyst. So if I have my research, I have a fundamental duty to give it to my clients first and not on free. I use Economic Times portal more for knowledge sharing than free recommendations. But I do help people get the recommendations. If you want recommendations from me, then I already shared my Telegram channel with you. Okay, so we have Goel. He's asking for Tata Power. Tata Power is a great stock, great company, great founders. Everything about the Tata Group is just so great. Let's see. Fantastic momentum. What is the volume saying? Okay, the volume is also kind of catching up. And yes, it does look like the stock is ready to give a breakout because see, the volume has been consistently strong when it was going up, and the volume absolutely crashed when the stock started to come down, but the volume again started to pick up when the stock is going up. So this looks like a pretty strong case of trend continuation. AWL, why are you interested in Adani stocks? I mean, don't you love your capital? Don't you love your money? Don't go for any Adani or Vedanta Vedal stocks trading. It's just your capital deserves better, okay? I mean, just look at the stock, how consistently it's been falling. Even if it goes up, it'll go up maybe 5, 10, 20%, but the risk to your capital is more than 20, 30, 40, 50% from here. So absolutely no. If you have any Adani stocks in your portfolio or Vedanta stocks, just sell it off, just rip the band-aid, allow your portfolio to heal. This is not a good stock to hold on to, absolutely not. Ranjit, that's for you. Let's look at our all right. Okay. Ooh. So I unfortunately don't give advice on IPOs because I'm not an expert on, IPOs. Also, I'll share my personal opinion about IPOs with you. See, the promoters know the best about a company, right? And if they're trying to sell holdings, with all the knowledge that they have about the company, even if they want to raise money, right? See, a lot of times raising money is not the purpose to raise capital or do IPO. It is simply because the promoters or the early investors want to exit, right? So because there is a lot of things at that point of time during the IPO that you may not know about a particular stock despite of the prospectus and everything, it's a huge risk that you take. Plus, there is a huge uncertainty that is attached to getting an allocation because if you know the retail participants allocation, right, the part of the entire kitty that they have opened up to sell to the various institutions and parties, out of that kitty, the part that the retail trader gets is just so small that if it's a great IPO, right, if it's a great company doing its IPO, there is a very tiny little chance that you're going to get that. So personally, I don't think it's a good use of my time to put in all that effort for just a 15,000 rupees allocation because usually my ticket size is a lot bigger. So I would rather stick to what I do, that is swing trading in the market. And I know that there is a lot of content out there being created on IPO, and that is because IPO has such huge interest among retail traders. That is not necessarily because IPO is a great investment tool. Statistically, if you see, majority of the IPOs out there are not doing good. They are a huge disappointment, and retail traders most of the time participate in IPOs just for the IPO gains. Because there's so much uncertainty around it and a huge risk, I personally feel that the risk to reward for participating in IPO is not good at all. So that is the reason why I don't participate or don't take any interest in studying IPOs whatsoever. I don't think it's a great use of my time, which I could otherwise devote to swing trading and make a lot more money. So Ankita Ghosh has commented that she spends a lot of time in exiting stage. So Ankita, technically you should be spending zero time over there, because like I said, you should constantly be trailing your stop loss, right? Your trailing stop loss should do the exit for you. Because think about it like this. If a stock is on a very strong upward trajectory and if you're trailing it constantly, then you don't want to exit that stock. Okay, if it goes sideways, you just have to be patient. And if the stock starts coming down, the trailing stop loss is going to automatically take it out. So while it is a stage of your investing, it is not a stage to spend a lot of time on. You should use trailing stop losses to exit your positions. Now, if you tell me that your trailing stop losses are not there, you can't trail because your broker is not giving you trailing stop loss facility on your positional orders, I will say change your broker. Anil is saying screen is hazy. Yeah, that might be because of buffering, Anil. So this session is recorded and I will be uploading next week the recorded session on YouTube, which will definitely have HD quality, because I record them in like the highest quality possible. So that will be crystal sharp, so you can refer to those. All right. From the top, so we have Sahil asking for M&M. I don't think that auto sector looked great to me the last time I checked it out. But the last time I checked it out was nearly 2 weeks back. So is M&M looking good for a fresh entry? The answer is no, it is not. I think M&M it wants to take a bigger correction than what it has already taken. So I would say from this point onwards, a minimum I am expecting, but considering the amount of weakness that I am noticing, that can also be 20% thoda mushkil hai. 15%, 15% looks very likely. 10 to 15% correction is what I'm expecting. So until that happens, I personally wouldn't be very fond of going long on M&M. All right, let's take a look at Orient Electric for Ashwin. Orient Electric. There you go. Ooh, Orient Electric looks interesting. And yes, okay. Strong strength, and let's also apply Orient Electric here. And let's remove Reliance. So right now, based on the discussion that we just had, right, it looks like Orient Electric is pretty much matching the performance of Nifty so far, but declining, and it has flattened out compared to the last 100 days average volume. The weekly time frame is also showing a positive divergence. Let's my screen. So let's start again so on the daily time frame, we can see there's a strong positive divergence as I've marked. The volume has flattened out compared to the last 100 days average volume. The 75-minute time frame is showing a RSI positive range shift. and the 15-minute time frame is already in the positive range of RSI, which is great because the price has been going down, but the RSI is in a bullish mood. Okay, so range shift is basically the mood of the RSI. So Orient Electric, I think, looks great. However, and Orient Electric is also stock. Okay, it's a uptrending stock, but at the same time, it also moves like an elephant, which means that once it catches a direction, it will keep going in that direction. Okay, it's very evident in the past price activity also. Like for instance, if you look here, the stock went up 160% in like 500 days, and then here it went up 122% in 370 days. Okay, so it gives fantastic moves once it's percent. The last time it fell around 40-50%, 43% in a matter of how many days? In a matter of 88 days, right? So it moves like an elephant. Like it's so, especially on the upside, it goes like really slow. But I think this low that was formed here, right, this pin low, I think this pin low should be a stop loss. So it's only a 5%. It's a very nominal stop loss of 5% on your holding, and I think you should hold this for at least the first target of 263, which is 20%, right? So the risk reward ratio 20 divided by, when you do your post trade analysis, which I know 99.9% people don't do, but you must, right? When you do your post trade analysis, that time you have to make sure that the ratio of your profits to losses is at least 3, right, in total amount. So suppose you took 10 trades, of which 5 were losses and 5 were profit. The total profit should be at least rupees 90 if your losses is 30, or if your losses is 50, your profit should be at least 150 realized profits, right? You should do this analysis, and at any point of time in all your stages of analysis, you have to strive for the number risk reward ratio greater than 3. If you successfully do that with a laser focus, there is no way you will not be massively successful in swing trading. Since 4-5 years now, like I'm committed, I'm married to this number, and the last 2 years has just been so great because obviously I started with a very small base, but the last 2 years that base is no longer small, and just given me so much flexibility in my life. It's absolutely like this small magic number of 4 characters, RR greater than 3, has changed my life, and I promise to you, if you swing trade with this number in focus, it will change your life too. Now, if you want to know, or if you're interested in just connecting with me and understanding how I can help you, then again, I will remind you that my Telegram channel's link is pasted in comment. Click on, let's take the conversation forward. So for today, this is all I had. Unfortunately, I need to take off, so I will be cutting the session short here. But be sure to be present day for the next live webinar at 5 p.m. sharp. And the topic will be disclosed in my Telegram channel on Wednesday itself. So I will see you again in the Let's Get Technical series. Until then, namaste.